I'm going to show you guys today exactly the things you'll need to start day trading, what is day trading, and how you can make money in the markets. A lot of you have probably seen charts like this online or in social media and know that it's the market, but don't exactly know how it moves or why it moves or how you can make money. So today I'm going to show you exactly how to do that. Right here in front of me is TradingView. It's basically a chart analysis tool that you can use. I'll leave a link in the description of the app so you can go down and download it yourself and check it out. Basically what you're seeing are these candlesticks, which if we zoom in, we can see that there are red candlesticks and there are white candlesticks. Now the white candlesticks, you can change the colors to anything you want. Usually they're green. I changed them to white, just preference. And basically what this chart is showing is buyers and sellers kind of battling between each other to push the market in a certain direction. When buyers are in control of the market, you'll see the market will tend to push upward, showing that the demand is outweighing the supply. Vice versa, when the supply outweighs the demand, the market will start to go in a downward direction. This will cause something called trends to develop. And basically what we're trying to do is position ourselves in the market where we can enter in at a certain area and expect price to go down and reach a certain area and we make profit. For instance, if we can see that we're in an overall downtrend, and this is just an example, this isn't an actual trade, but if we let the chart play out and we get in at this moment expecting price to go downwards because we can see that the supply outweighs the demand and we're right on the trade, you can see that price starts to head downward and we can make profit. Now there's a ton of different ways that you can do this. There's tons of different trading models that you can use, so many different strategies that are out there. One confluence I like to use when entering my trades is something called support and resistance. And support and resistance levels are basically all over the chart. If we go here, we can click here, and you can see that price here has repeatedly respected this level. So you can see we come up through, we bounce off again, we bounce. So this level is a high interest where price could potentially come up and have resistance on the opposite side where we can enter and then come down and hopefully make a profit on it. This basically happens all over the chart. And if we come up here on the left side and click this button, we can drag this trend line along these levels and you can see that price came up, respected this level, came down, bounced off of it, came down, bounced off of it again, showing levels where price was respected. Another tool that I love to use is something called the Fibonacci retracement tool, which if you click on this upper left hand side, we can take our fib tool and click from the high to the low point of a downtrend. So in an uptrend, we would click the low to the high. But basically, we're trying to see if price wants to come back into something called the discount zone, which is an area where price is likely to come up through this halfway point of this impulse move, in this case 0.5. If we compare this level to also support and resistance zones, then that adds confluence to our trade. And when we add confluence to our trades, they're more likely to play out in our favor. Now, another thing you guys are gonna need is something to track your trades, because you wanna make sure that you're improving. Trading is just like any other profession where you wanna treat it like a business. Tracking platform that I use is Notion, and I'll leave a link of that in the description down below as well. So in trading, there's something called risk factors and risk. And this is extremely important to trading and arguably probably one of the most important things when you're getting into day trading. And basically what a risk factor is, or risk factors, is what you're willing to risk per trade when we're entering into the market. So if we want to enter the market somewhere around this level of the market and expect price to go higher, if we are risking $100 on this trade, we would effectively be making $300 if we're right. And our 1 unit of risk would basically be this $100. Now, this goes for the same way if we're wrong in the market. If price decides to come up, fill us, and then come down and hit something called our stop loss, we effectively get out for a contained loss of $100, minusing 1 unit of risk. So with that, if we have 3 wins, let's say, and 6 losses, but every time we're trying to win a trade, we're effectively trying to make 3 R, and every time we lose a trade, we're only losing 1 risk factor. So we can see we had 3 wins, so 3 times 3 is 9, so we're up 9 units of risk, minus 6, because every time we lose, we only lose 1 unit of risk, which leaves us of a net profit of 3 unit of risk. And this is basically how trading works over a long period of time, that even though we lost half of our trades, we were still able to be profitable. As you can see, it's really cool when we can position ourselves in the market and kind of have an educated guess on where it's going to go, that even if we're wrong, we can still make money as long as we are containing our risk. This is just kind of the basics of trading, and there's so much more that goes into it. This is just, you know, the first video that I'm making, and I'm going to make multiple videos explaining my strategy and how I trade the markets.